For the first time ever, US oil prices plunged into negative territory last night, meaning that the people who have the oil would have to pay you to take the oil. At one point, the oil prices were trading at about 30 minus $37. So, to talk about what really happened, what are the implications of this, and what it all means, I've got my colleague Tushar Gupta to unpack it all for us. Tushar, welcome.
Hey Karan, hi.
Tushar, could you just begin by telling us what exactly was happening with the trading last night?
So last night was historic for the oil markets for a number of reasons. For the first time, one of the three global benchmarks for oil, that is the Western Texas Intermediate, which we know as the WTI, it went into the negative territory. Essentially, what it means that usually when you sell something, you're paid for it. But at this point, the producers of the oil were actually paying people to take the oil off their hands. So it was historic because never before in history has such a negative price dive been witnessed. When the market started yesterday, that was around 8 o'clock India time, it was trading at somewhere around $18 a barrel. Okay. Another 3-4 hours, it went close to 5. People were speculating, could it go to zero? Eventually, it went as low as minus $37 a barrel. It's almost a $50 shift within a day. Now, please note this was one of the three global benchmarks, the other two being the Dubai crude and the Brent crude. So, this was just the WTA that ventured into the negative territory. The other two was trading well above the $0 mark. In fact, Brent was trading in excess of $20.
Right. Tushar, what do you think is sparking this on? Because we've seen oil trading undulating a lot, say, over the last year. And even starting from this year onwards, you had a lot of fluctuation given OPEC's decision and even Trump sort of interfering and talking about striking a deal with them. Could you just talk about this? Is it bigger than coronavirus? What is influencing this?
See, if in a parallel universe, if we were not talking about the coronavirus, we would have been talking about the oil war. Remember, before coronavirus took over the global news cycles, we were talking about the trade war between America and China. Now, what that has been replaced by is an oil war between Russia and Saudi Arabia. So, what happened essentially in March when the OPEC Plus members were supposed to meet, Russia refused to cut down on its oil production, which enabled Saudi Arabia to flood the market with oil. Now, what these two countries did not factor in was a possible lockdown of almost 3 billion people on earth in the month of April. So, while they were embarking on an oil war, what they were not factoring in was there will be a lockdown which will kill the demand for crude across the world. Now, please note, when it comes to demand for crude, most of it is due to the road transportation, the aviation in the form of gasoline and jet fuel. Now, the cars are parked, the planes are grounded, so the demand has gone for a toss. Second thing, Donald Trump stepped in because the depressing prices of crude hurt his political ambitions, because the states which are in the US, the states which are into oil production are primarily Republican states. So any depression in prices further hurts his political pursuits, given we have elections in the US later this year. So Trump stepped in, brokered a deal between Russia, Saudi Arabia and other OPEC Plus members, which took almost 4 days. Mind you, the deal took 4 days to come into being. The problem with the deal is it's too little too late. One, the deal comes into effect from May. So the reduction in oil output would be from May, and that would be 9.7 barrels per day, 9.7 million barrels per day. The demand, however, has fallen by around 20 to some reports even state 35 million barrels per day. So what we saw yesterday was a culmination of all these facts. There was no demand, the deal hadn't worked out, the markets were flooded with oil, and WTI took a hit.
The equation is very simple. There are people producing the oil and keeping it, and then there are people who want to buy it. Now, there is a lot of supply, which means that there is a lot of oil being stored. But you wrote just recently, I think a couple of weeks back, about how we are also running out of storage space for the oil produced, isn't it?
See, Karan, one of the reasons W had a negative price dive because the final delivery point of this crude is in Oklahoma, in a place called Cushing. Okay, now the place is landlocked. There is no option to ship oil on oil tankers across the world, which is the case of Brent crude. So one reason was they are running out of physical storage space in the ground. What has happened in the last 2 months is sort of funny. People are now paying oil tankers to store oil at seas. So imagine you might be having at this point a lot of oil tankers roaming around the ocean storing lots of oil. The third place for storage of oil is pipelines. So the oil is transferred, which is produced in Texas, the WTI, it is transferred to an intricate network of pipelines to Oklahoma. Those pipelines are even full. So even if traders were willing to take the physical deliveries of the barrels, they had no place to store it. Imagine you have all the money in the world to get the oil but no place to store it. So what you will do, you would rather sell that trade, and that's what happened yesterday. There were more sellers, far more number of sellers for the crude than there were buyers.
Tushar, also what we are talking about here is the oil futures market, isn't it? Which means that there is a agreement that is made to trade the oil at a predetermined price much earlier at the start of the agreement. Could you just talk about that a little bit?
So one thing very important note about this is not a permanent fixture. Now we are not going to have a month where the WTI will trade at zero or negative pricing. Every month before the third business day of every 25th of every month, the oil contracts expire. In this case, April 21, which is today. So what happened essentially that the May contracts were coming into an end. That is, the deliveries which were scheduled for May were coming to an end. Now, people are already in the middle of a lockdown. They do not see the demand for crude, and hence they thought that it's no profitable venture to take the delivery of crude oil, and that's why you had the negative price tag. However, the contract prices for June are still in excess of $20. For September, they are as high as $30 for WTI. So it's not all that bad as it looks. So when markets open after Tuesday, that is April 21, WTI will again be starting to trade around the $20 mark. Further, its price will be dictated by how long the lockdown is, how the demand for the crude works out, given the outbreak and everything. So a lot of factors in play here.
Finally, Tushar, how oil markets behave tend to somehow give an indication of the global economic situation. Of course, sometimes it might be an exaggerated view, and they could be reacting to unnecessary panic. But what do you think? Should we be reading into this a lot, or is this just a very temporary thing?
See, what we need to notice for the June contracts pricing, which will start in the neighborhood of $20. Now, when in the starting of this year, before the coronavirus outbreak, before Russia and Saudi Arabia started on a trade war, on an oil war, WTI was trading as high as $58. It's now unthinkable that it was trading at $58 a barrel in the beginning of the year, and it went as low as minus 37 last night. So what this reduction in demand signifies essentially is there is a stalled economy. Planes are halted, cars are halted, there's literally no transportation. 3 billion people are sitting at home. So what we need to read into it is that if the economy remains in the lockdown, the demand will further fall for the crude. At this point, it's cheaper for producers to pay off people. For instance, they were paying off $37 a barrel last night for people to take off all those hands. But if this goes into June, July, which is a wild assumption, I don't see the lockdown extending into June or July. But assuming it does, for the sake of argument, some producers will have to shut shop, and that would be bad for employment. That would be bad for global prospects. Because if you have a lockdown that long, it will start impacting other sectors of the economy. For now, do not read too much into what happened last night, but keep an eye on the June's contract pricing for sure.
Thank you for joining us.
Thanks, Karan. Thanks a lot.